All right, now let's get more on a Bloomberg exclusive today. Palm finally for sale after years of rumors. Our next guest says Palm will burn through $170 million in the current quarter alone. So it makes sense for the company to look for buyers now. Joining us is Deepak Sitaraman, an analyst in the global telecom equipment research team at Credit Suisse. He is also a top-rated Palm analyst and has a neutral recommendation on the stock. Deepak, great to have you with us. Let me ask you first of all about the value of this company. We've been talking about it a lot today on Street Smart. We see the stock going up to almost $7, and yet the guys at Adam Johnson's on the phone, they're saying it's really worth more like 3 to 4. We had Nancy Havens-Hasty on earlier, and she says she doesn't like it either because they've kind of been behind the 8 ball the whole time as far as the smartphone wars go. What are they worth?
Well, on a fundamental basis, we think the shares are worth about $3, which is also our price target on the shares right now. Now, clearly, in an acquisition scenario, we think that value could be, somewhere between $5 and $7. And the way we get there is we look at comparable transactions on, specific to software. And the most obvious one is Nokia's acquisition of its operating system about 2 years ago called Symbian, where the company paid about 2 times based on enterprise value to sales. And so we think a discount to Palm, for Palm is warranted. So if you apply a multiple of about 1.25 to 1.75 times EV to sales for Palm, you get to somewhere about $5 to $7 a share, which is roughly where the shares are trading at right now.
What is it that people are going to pay $1 billion then for here? I mean, is it just the brand? Is it the software, the operating system that they've created? I mean, what's worth the money?
Well, clearly the most attractive aspect of Palm is its software platform that they've called WebOS, which is very intuitive, which has been written from the ground up specifically, for smartphones of today in terms of having touchscreen functionality and enabling apps, ecosystems, and things like that. Now, in addition to that, Palm probably does have some amount of IP, intellectual property, patents. And there is some value to the brand as well, at least here in the U.S., where Palm is more well-known than it is globally. Why
didn't the phone sell better? I mean, we had so many guests on last year from Palm and from the organizations that own Palm. Elevation Partners is one of them, obviously the huge chunk that they hold, saying that this is going to be the next iPhone killer. It's going to be so amazing, saying when we get it, we'll understand why, but it didn't really pan out that way.
Yeah, you can point to a number of things. I mean, number one, I guess the manner in which the device was marketed was not as effective in terms of demonstrating what the device could do and the uniqueness of the very good WebOS platform. You can point to the fact that Palm partnered with Sprint, who is arguably one of the weaker carriers here in the U.S. And third, we think that the developer ecosystem didn't get off to as good a start as we would have liked to see. I guess for us, the biggest issue was Palm was very slow in expanding its distribution footprint. And so when we downgraded shares of Palm to neutral from outperform last September, we did that on the basis that the second product, the Pixi, was going straight to Sprint as an exclusive product. And at that point, we questioned how aggressively Verizon and AT&T would promote these products when they ultimately got them. And indeed, that seems to be the case as it is right now.
So would the buyer of this company, I mean, whether it's Nokia or one of the Taiwanese buyers, a Chinese buyer, what do they do with it? Do they turn around and use the operating system in their own products? Do they use the brand? I mean, what's the most important part that you see being used after they're taken up?
The most important part clearly is the software. Like I said, again, the brand does have some value, but that's more of a U.S. Centric value of it. In addition, so if you look at sort of who the potential acquirers that we read about in the press are, you have a company like HTC, which is a Taiwanese company. Now, clearly, they could use the software, but for them, we think part of the issue for them to expand their share is to grow their distribution and to grow the profile of their brand. And we think that Palm, while they will help them on the software side, doesn't do much for them in terms of helping them expand brand and distribution.
All right. Hey, Deepak, thanks so much for joining us. Deepak Sitaraman there from Credit Suisse talking about Palm. He's one of the top-rated analysts on the stock, and he does rate it neutral and says it's basically about worth where we see it trading right now.